Well, thank you everyone for being here today for business use of your home. This is a deduction that can save a lot of money for business owners. And I definitely would like to share this with folks because a lot of people don't claim this. And if you are using your business out of your home or any part of your home for business, I want to be able to explain all the rules regarding that and how that works. I also want to thank the William Factory Small Business Incubator for sponsoring this group of meetings so that small business people can get more tools in their arsenal for business success. And so we certainly want to thank the sponsoring organization here. So let me get right into it. First, one thing I want to let people know, we're not in tax season. I'm actually broadcasting to you right now in the beginning of September, and we're just starting to feel some change in the weather from summer. But business use of your home, like Billy says, the teacher, may have its own season, tax season. But I would want to recommend to most business owners that being able to claim credits for your business and to get the most out of tax law requires ongoing planning throughout the year. So really, tax season is all year for a business owner. Now, the first ground rules that I want to lay out are, I may be a tax guy, but I'm not your tax guy. And what that means is I don't know all the details regarding your business. And as a business owner, you know more about it. But what I am going to be telling you about is the general rules, the overview, the requirements, and maybe more importantly, how to find the information that you need in order to be sure you're qualifying for any tax credit and complying with the tax code. So for anything I talk about today, I want you to double check and make sure that we're following the tax guidance that's at irs.gov. Also know tax professionals can also help you with this, and I highly recommend any business professional that if you don't have someone who's helping you on your taxes, I recommend getting one. Whether you can get an accountant, a CPA, or an enrolled tax agent, there's a lot of different folks that can assist you, and I certainly want to recommend that. First, a little bit about myself. I've been working for the IRS for 15 years now. And my current role is what's called a tax specialist, and I do communications. I work in the outreach department. But previously to this role, I worked for quite a number of years in the collections departments. And I really found that people who have a tax balance due or a collections problem really never intend to get that far. And in fact, most people want to comply with tax law. And I realized that it's just very difficult or challenging for a lot of people to understand the tax laws. And so hopefully this can help you understand one other part of your tax responsibilities as a business owner and how to make sure that you could save some money on taxes. So getting right into it, first I want to dispel some misconceptions because when tax laws change, a lot of taxpayers out there, including business owners, don't always find out about the tax law changes right off the bat. And so sometimes they're surprising. There are some people that are still operating on principles that they used in prior years. And the tax laws changed in 2018 to change some things. And so I want to talk about that first. First, it used to be that an employee of a company could claim expenses for business use of the home and deduct them. Well, unfortunately, that's no longer the case, and it hasn't been the case for a while. But again, some people might not have been aware of this. And so with that in mind, we're going to also mention a little bit about S corporations. The owners of an S corporation actually are required to be an employee of the corporation. And so because of that, they aren't going to be able to deduct in business use of the home in the same way. And so there's a workaround, though. For an owner of an S corporation, we'll talk about that. Also, there are limitations on real estate taxes that you can deduct. So there is a limitation of $10,000, or if you're married separately, it's going to be even limited further to $5,000 of total real estate taxes that you pay. So you've got two different forms we're going to be talking about. One is a Form 8829, and that's where you deduct the business use of home. The other one's the Schedule A. And for some people, they're deducting real estate taxes on the Schedule A. And then for business use of the home, they're going to be deducting part of the real estate taxes on the Form 8829. And so I just want to remind folks, there are some dollar limitations. Check the worksheet, check the instructions for that at irs.gov to be sure you're meeting those requirements. So what am I going to be covering today? I'm going to be covering an awful lot, but really it all applies just to how to deduct expenses related to using your home for business. So I'm going to be talking about how to calculate the deduction, how to claim it, and what business use of the home means to the IRS. The IRS uses language a little bit differently than the average person because we want to use particular words to mean specific things. And so we're going to talk about what are the requirements to meet business use of the home so that you can qualify to claim the deduction. Then we're going to talk about how to claim a business percentage. So that's a percentage of your home. We're going to talk about the different kinds of expenses that are deductible and how they fall into each category. Then I'm going to talk a little bit about those deduction limits. And then how do you document it on the tax return? How do you tell the IRS? Because forms are where the rubber meets the road, so to speak, for the IRS. You tell us your tax situation based on what you put on those forms. And so I'll talk about what forms and where to put these deductions. So the first part, I'm going to talk about a lot of these different terms. And the term home, when we say that, this is going to mean not only your house or your apartment or your condo, mobile home, wherever you actually live, but also similar extensions of that, like using a studio, a garage, a barn, a greenhouse. So in other words, it doesn't have to be attached directly to the house itself. And so these are going to be deductible. When the IRS uses home, we mean any expenses that you're paying for your home and includes some of these other specific places. The first way I'm going to talk about is the simplified home deduction. This is for folks who have a smaller footprint or a smaller commitment of their home for business use. The simplified method is explained in Revenue Procedure 2013-13, and it's been around for quite a while, over a decade. It's meant to be an easier record-keeping method. It's also meant to be an easier way to figure out how much you can deduct. So any expenses that are qualified business use, you can deduct. But the standard method, which I'm going to cover next, it can be more complex. We say complex and burdensome. What we mean by that is you have to have more records. For a lot of people, though, the dollar amounts are going to really be the reason why they make the decision between the simplified home office and the standard method. So for simplified method, the biggest difference is the total amount you can deduct is $1,500 per year. And that's based on $5 per square foot allowed for up to 300 square feet. Now that means if you have a smaller home office, let's say it's 200 square feet, you can only deduct $5 per square foot. So at 200 square feet, $5, that's going to be limited at $1,000. So what does a deduction then mean? You make money, you earn money as a business owner, you have revenue coming in. You'll deduct all your normal and regular business expenses and then be able to, right off the top, take this dollar amount deduction. In the simplified method, if you have a 300 square foot office, you'll take $1,500 off that revenue of your business before you calculate the amount of the tax. Now, you can choose between the simplified method and the standard method for any taxable year. But if you're in the middle of a year, you can't switch up. So once you've elected a method for that year, you can't change. You're going to need to keep it consistent throughout the year. Now, you can't also decide, I want to use the simplified method and also then deduct actual expenses for business use of the home. So really, this is meant to be simple, but it's so simple that it just means if you have less than $1,500 in expenses for business use of your home, you may be better off using the simplified method. But if you have larger deductions, you're going to be better off using the standard method. Now, how do you report this? So that $1,500, how do you deduct that? You're going to report the deduction using the Schedule C. So if you are a sole proprietor, that is, you own your business and report the income on your Schedule C, then you'll just use the simplified method worksheet that's available at irs.gov as the instructions for Schedule C, and you'll calculate the simplified method. Pretty straightforward. It's just one math problem. $5 a square foot times however much space you have dedicated to your business in your home. Now, before I get into the standard method, I am going to want to detail what does the IRS require for business use of the home. And we have specific things that you need to meet. Now, we talked about how the deductions may be limited, but more importantly, it's how you use that space that's going to determine whether it qualifies. So the first is the term exclusive use. The IRS is going to want you to be sure that you're using it exclusively for business and that it's a regular use. So it's not something that is periodic, maybe once in a while you use it for business. And third, used for business. And so we're going to look at specific examples of this, but exclusive use means exactly that. It's only exclusively used for business. So it's either the principal place of business, in other words, it's your only location, or it's the primary place where you meet with your customers, your patients, clients, whatever kind of business you have, it's going to be the place where you meet people. And a separate structure not attached to your home that you use in connection with your business is a great way to specifically delineate it. So one thing that I also would like to mention to people, a lot of people have questions about exclusive use. And really, especially let's suppose you have a studio apartment. Well, how do you have a separate office space? What I would recommend is just use some dividers or something like that. Similarly, if people have a garage and maybe they use part of it to park their car, but the rest of it is used for business, maybe you mark it off with tape on the floor or something. But you want to be careful that you are marking off a specific portion that you're only using for business. So let's look at a specific example to try to flesh out what I was talking about, just to look at what this exclusive use term is going to look like in real life. So Ruth's a graphic designer. She has the computer in the family room. She does her design work, but the family also uses that room for recreation. Can she claim a business deduction for the family room? Well, you might have already guessed. No. And the reason why is it's being used for other purposes for the family. And so she can't claim a business deduction for its use. And this comes back to the general principle of business use of the home. What are you doing? You are deducting a portion of your home's expenses in order to be able to account for the fact that you're giving up part of your home for the business. And so in this case, because the family room is not used exclusively for business, then she is not allowed to claim it. Let's look at another option. Greg, he's brewing natural sodas in his garage. It's not attached to the house, and he uses it only for brewing and selling his product. One part of the garage is used for brewing. Another part of the garage is where he has tastings and sells his natural sodas. Does Greg meet the requirements for exclusive use? In this case, yes. He can claim the deduction for use of the garage because it's exclusive. We're going to talk about regular and for his business in just a moment as well. Now, I also, though, want to mention there are some very particular exceptions to that exclusive use. So if you use part of your home for storage, it doesn't have to meet the exclusive use test. This is very common if you have products to store and you use your garage. The other one that's very important is for home daycare facilities. Daycare facilities have special requirements for business use of the home. They're not going to be subject to the exclusive use test. And you can imagine why this might be the case. If you're running a home daycare facility, you might use the entire basement as a daycare facility during the day, but in the evening, maybe you'll use it for personal use. Daycare facilities, we know, have special requirements. And so because of that, they are an exception to the exclusive use rule. So storage of inventory in daycare facilities, go to irs.gov. And at irs.gov, if you put in daycare, you'll actually find an industry-specific page that spells out all the rules for daycare, including this business use of home requirement. Same idea with storage of inventory. You can find all the details about that at our website. So let's look now at the next use. We talked about what's exclusive mean to the IRS. But now let's look at what regular use means. For this one, you need to have a specific area in your home, and you use it on a continuous basis. So if it's occasional or incidental, it's not going to meet the requirement. And even if you don't use that area for any other purpose, in other words, it might be the only business office you have, but if you do most of your business office work at another location, then it might not qualify. So let's spell this out. How does this really look in real life? Tom, he's a painter. He paints landscapes. He's got a studio in his home. It's separate, and he sometimes paints there. But most of the time, he's painting outdoors. He's painting his landscapes outdoors. Could he claim a business deduction for use of his studio? In this case, it's going to come down to it doesn't meet the regular use. It might meet the exclusive use, the term we talked about first. But regular use means you continuously or regularly use this. And so he can't claim this deduction for use of the studio. Why? Because he uses it occasionally and not on a continuous basis. Now, for folks that have a principal place of business, sometimes they might have a location that they rent. So they're already paying rent to someone else for the principal place of business. And you might wonder, well, how does somebody who has a principal place of business, if they do a majority of their office work at their home office, could they deduct it? Well, it's not a disqualifier. You can have more than one business location, including your home, for your single business. And the way you qualify is if it is the principal place that you do things. So if it's exclusively used, let's say for administration and management, like you're doing payroll there, or you're billing your clients, or you're sending emails and communicating, or taking phone calls and talking with your clients in that home office, then if it's exclusively and regularly used, then yes. Now, it's very clear if you have no fixed location other than that, that's your principal place of business. But if you're doing substantial activities there, it's different. So your home office will qualify as your principal place of business if your home office is used exclusively and regularly, and you have no other fixed location. But if you do have another location, you're going to need to examine how you use it. And so some of the common activities that you might be doing are sending bills, printing invoices, keeping your books and records, ordering supplies, maybe coordinating with customers, like setting up appointments and orders and reports, etc. But there are going to be folks that have a home office that they can deduct and a principal place of business. So I don't want you to not claim this credit just because you have two locations. I just want you to consider, how are you using them? How often? Is it exclusive? Is it regular? And would it qualify? And so imagine, for example, that you've got a bookkeeper occasionally doing administrative or management duties outside of your home doesn't disqualify your home office. So you might employ, let's say, a bookkeeper to conduct some of these. And just because the bookkeeper, does some of this work doesn't disqualify you from doing that work there. Also, if you occasionally do this work elsewhere, maybe you've got a fixed location and sometimes you'll do the work there. So the other part is, imagine if your work is on the road. There are a lot of industries like construction. They might have a home office and do a majority of the business there, but they're going to do work at other locations. They're not a fixed location, but they're doing activities outside the home. And just because they do that, that doesn't disqualify a home office. Also, you could have substantial business activities outside of your home, like doing the work, but that still wouldn't disqualify having a deduction for business use of your home. So let's look at this in real life. Sometimes this will flesh it out better for a lot of people. Jim's a self-employed plumber. So most of the work is done at a customer's home, whether it's their home or office, installing and repairing plumbing and doing the work of a plumber. He's got a small business in his home, and he exclusively and regularly uses it for administrative and management details, but he doesn't do his own billing. He just has decided he's rather have a local bookkeeping service do this for him. So you want to know, does he get the advantage of a home office discount, this deduction? In fact, yes. And the reason is he uses the home office for administrative and manager activities regularly, exclusively, and just because he has billing done by a third party outside, that is not going to disqualify him. His business is going to meet all the qualifications. So just because you have a bookkeeper or an accountant or someone else doing some of the administrative activities, don't think that the requirement means you have to have all of your administrative activities done there. Another one is the meeting place for customers test. This is one way that you can look at your business and decide, no, I have to deduct business use of the home because I'm using it for my home. And so where do you meet customers? And if you meet customers, patients, clients in your home as a regular course of business, then it would qualify. And so it would be a deductible expense. That means you're physically meeting with them and using your home as an important part of your business. So let's look at the meeting place for customers in real life, see what Sarah is doing. She's an interior decorator. So clients will visit her home office to look at samples and patterns. There is a room specifically for this as her office, and she also does all the administrative and management of the business there. But once the clients figure out what they want and choose their patterns and different items for the interior decorating, then most of the project is done in the client's residence. So does her home office qualify, since most of the work is being done in a client's home? It actually does. Why? Because it may not be the principal place of business, or for where she does the work, but it is the principal place of business because she's meeting clients there, and she meets them in a normal course of business to discuss the options. Now, the easiest way to deduct is if you have a separate structure, like a studio, a garage, a shed, a barn, a studio, all these different things qualify. And so don't think that it just has to be your home or apartment. It could be other buildings on your property. So it doesn't have to just be the principal place where you live and breathe. It can be a separate structure. So let's look at how that works in real life. We've got Joanne, who builds custom designed furniture. It's in a detached garage. When she talks to clients, she might talk in the dining room, but the garage can qualify because it's separate. It's only exclusively and regularly used by the business to build the furniture. So she doesn't have to meet clients there, though. So you don't have to have one or the other or have all of it done in order to qualify. What it really relies on is those terms regular and exclusive, and those are going to be your keys to claiming this deduction. Now let's look at some of the deduction limits. Most expenses related to business use of the home are limited to a percentage of the home used for business. So you're going to compare how much of the home is used for business use versus how much of the home is used for personal use. There's two ways you can do this, either by square footage or area or by the number of rooms. So depending on which method looks better to you, you could decide to choose one or the other. And any reasonable method can be used to determine it, but these are the most common methods. So looking at the area method, I think this one's more common. The area method looks at the total area of the business and compares it by the total area of the home. So if your office is 240 square feet, the home is 1,200 square feet, you divide the two, you get 20%, 240 divided by 1,200. So that means your business percentage is 20%. You're going to use that 20% number to determine from the expenses of the home, 20% of them are going to apply to the business. And now hopefully, I hope the light bulbs are going off where you're realizing what's going on here. You're essentially giving yourself credit for paying rent or mortgage, property taxes, utilities, all the different expenses, and you're going to get to claim 20% of them. Why? Because you're exclusively and regularly using it for business, and you want to get credit for that. The number of rooms method can be a little bit simpler or maybe work better for some people who have a different layout of their home. And so if you've got, let's say, 10 rooms in your house and you use one for your office, that's 10%. It can be simpler than figuring out a square footage issue. Now, how do we record this? So we talked about how to calculate the percentage, the business percentage. And you're going to record the business percentage on part 1 of Form 8829. So this is a form that you're going to use in addition to the Schedule C. And the 8829 is going to be used to calculate the total amount you're deducting. And part 1 is where you put that percentage. So you start with your square footage or your rooms, and you figure out how much of your home you're using for business. And then that gets input on the 8829. So let's talk about then what kinds of expenses then you're going to be able to deduct. We talked about an example where somebody's deducting 20%. Well, it's 20% of what? Well, it's 20% of any of the expenses of the home. And we divide it roughly into a couple of different expenses or different ways of talking about seeing if these expenses qualify. Direct expenses, indirect expenses, and expenses that are unrelated expenses that won't be able to be included. So the first kind of expenses, these are not related necessarily to business use of the home. They're related to just any business, and these are called ordinary and necessary expenses. So on the Schedule C for sole proprietors, you're going to deduct your advertising, taxes, automobile transportation expenses, tolls, travel, salaries, if you have employees, if you have contractors, any of your business supplies, the costs of the products you're selling. There's the long list of ordinary and regular necessary business expenses. And you're going to normally be able to just simply deduct those on the Schedule C. So these expenses come out and they're not related to the business use of your home. One thing I've heard in the past from some people, and I want to encourage folks not to leave money on the table. In other words, don't pay too much in income taxes to the IRS by not claiming something. And I've heard from people say, business use of the home, sounds like there's a lot of tests involved or requirements. I'm not sure I want to risk an audit. My recommendation is really no, claim the credits you're due and decide how to make it work for your business, because you don't want to leave money on the table. So any of these expenses that are regular, ordinary, and necessary expenses, they're not going to be limited to the home percentage or the deduction limits. So they're already deductible on the Schedule C. But business use of the home is going to look at what kind of expenses are they when you take that business percentage and apply it to these and see if it really can be deducted. So if you're only making improvements to the business area, like painting or repairs that are made only to the area used for business, that's pretty clearly it only applies to the business. It doesn't apply to the whole home. Similarly, high-speed internet. Let's suppose you only need normal internet, but for your business, you might need a really robust business level or business quality internet. If you're using that for your business, then those are going to be deductible in full. Now, there are some limitations elsewhere we're going to talk about, but if you purchase something just for the business or make a repair to the business portion of the home, just because you need to raise it up to the level that you want it to be. You want to meet clients in a really good looking location, so you're going to paint it. Those are direct expenses. Those are going to be deductible in full. Indirect expenses are the ones that we're going to use that business percentage. They're going to be based on the percentage of your home used for business. And so indirect expenses are going to include a lot of different things, and I'll talk about what those exactly are. Then there are some unrelatable expenses, and these are ones that I want you to be careful about, because These are spelled out in the tax code as unrelated because sometimes people try to abuse these as a way to get personal benefit and then claim a deduction, claiming it's for the business. Things like lawn care, things like external improvements, things like, anything that's applied to the personal and the business potentially, but really don't directly apply or improve the business. And so one that's specific is lawn care. I've heard of other people trying to claim expenses for their home pet as if that was a security expense. Again, be careful about what you claim. There are limitations, and you don't have to claim things that are unreasonable in order to get a good benefit. So, which expenses are the ones that are deductible that are going to be used using this business percentage to claim? Anything associated with owning a home or renting a home, real estate taxes, deductible mortgage interest, qualified mortgage insurance premiums, and again, if you use your home for business, then insurance, homeowners insurance, renters insurance, repairs, utilities and services, even depreciation. And so all of these can be deductible according to the percentage as long as you're meeting all the other tests. Now, the other deduction limit is going to be your gross income. So if your gross income is $1,000 and you've got expenses greater, you're going to be limited. And so if your gross income from business is equal to or greater than your business expenses, deduct everything. But if your gross income is going to be less, especially if it's your first year in business or you're just having a tough year, then the gross income less than business expenses, it's going to be limited. Expenses limited to gross income from business use of the home, minus the ordinary business expenses and the business part of the expenses. And if you have expenses that aren't deducted due to this limitation, you can actually do what's called carrying forward. Talk about this to your tax professional, because you can carry forward expenses to a year that you do have more profit. There are limitations on this, but you can report all of this, again, using the 8829 and carrying those numbers over to the Schedule C. Now, I'm going to talk a little bit about the Form 8829, and this applies with the Schedule C to sole proprietors. But a lot of you might be in a partnership or in an S corporation. In situations like that, you aren't able to deduct business use of the home in the same way, but you can still deduct something like this. What you want to do is to establish an agreement with your company. I advise put it in writing. Establish an agreement that for business use of your home, the business is going to pay you, much like they're renting from you, a certain fee or a dollar amount. And I recommend you use a lot of the business use of the home percentages to determine what's a fair market value of what you're renting to your S corporation or your partnership. So be aware that there are ways that an owner who has business use of their home and they're still an employee, like as an S corporation owner, they can still deduct it, but they need to have a spelled out working agreement with the business to do it. All right, let's look at how the sole proprietor deducts this. Form 8829, right at the top, you're going to figure out the area. That's that business percentage we talked about. And you're either going to choose the number of rooms method or the area percentage method. So it's got a place where you can calculate that, and that's what those first few lines are. The total area of your home divided by the business use. Now, if you're operating a home daycare business, you can skip some of these lines and refer to the instructions for how you're going to report yours. So the next lines are going to be looking at any gain derived from business use of the home, like capital gains or losses, or maybe sale of business property. These are certain deductions. And so I know these make it a little bit more complicated, but if the gross income from your business is from business use of the home, then enter it on line 8 and then use that line, use these transferring over to Schedule C. But any gain of the business, in other words, like capital gains, maybe you sell certain business property, you're going to need to deduct that from it. So if you file more than one 8829, for example, if you have more than one business, include only the income earned and the deductions for that part of the income. Sometimes also people might move mid-year. And if that's the case, you may need to add more documentation here. So now we're going to be looking at calculating the deductions for the operating expenses of the home. And again, I'm going to remind you of the direct and indirect expenses. That is, expenses are only allowed because that part of the home is used for business. And so you can enter in the different categories on this 8829, the different types of expenses. And so again, remember that direct expenses, those are the ones that are directly applicable to the business. They only apply to the business part of your home, such as like painting that part of the home. So that means you can deduct 100% of those. However, the things that benefit both your business and personal, then you're going to use the percentage. So keep that in mind. If the electric bill is $800 and you reasonably estimate, $300 the electric bill for lighting, and your business use of the home, let's say it's 10%, you use the calculation there. And so we're not going to go over every line, but I will say that the best resource for this is the instructions for Form 8829. It's going to walk you through how to claim the portion of electricity, the portion of all of your utilities, and the portion of things like rent, mortgage, etc. Once you get your bottom line on 8829, it's going to tell you that dollar amount. And that dollar amount then becomes a deduction that you'll transfer over to Schedule C. So you're going to take the last line of 8829, which currently on the form is line 36. You're going to transfer it over to the Schedule C on line 30. And if you're savvy enough on the Schedule C, you'll realize line 30 is after you've taken your ordinary and necessary business expenses, like cost of goods sold, advertising, etc. Now, let's look at some really important deductions and things that are going to be red flags for an audit, but also just simply, things to avoid, best practices. You can't take a double deduction. And what we mean by that, you might have heard it called double dipping elsewhere. But if you report a business portion of the taxes and interest and deduct that on the Schedule C, well, you're going to have to do a little math. And if you're also using the Schedule A, then make sure you're calculating only the personal portion on the Schedule A. So you don't want to report them twice. And that's really one way that it's very easy to mix it up, make a mistake, calculate the total amount of my rent for the year, calculate a percentage, and then deduct it elsewhere, especially if you're deducting on Schedule A. This is an easy way to deduct something twice. Publication 587 is going to caution you on how to avoid that. Now, one thing I do want to also let you know about, if you're going to deduct business use of your home, when you sell the home, if you sell for a profit, there are some special rules that apply. So if you do have a deductible gain, a capital gain, they call it, if you have a capital gain where you made a profit on selling your home, then you may be required to do what's called a clawback, or essentially paying back the amount that you could have claimed for depreciation. So if you're claiming depreciation over the years, then that depreciation, you're getting a credit for it and basically getting a lower taxes during the time that you own the home. But if you make that profit up when you sell the home, then you're going to have to use publication 523 to see if you might be required to pay back part of that credit that you got during the year or during the years you owned that business. And so record keeping is going to be really important to make sure that you do this. Again, publication 523, selling your home, is going to talk a little bit about that. Also be aware that there are some people that try to use the business use of the home as a way to avoid taxes illegally. And I would say tax planning and planning how to structure your business and planning how to design a business office or design the business location as you're in your garage or studio. There are ways that you can plan ahead. There's nothing wrong with planning ahead so that you don't pay too much in taxes. And we find that most people actually do accurately report this, but some people cannot take the big principle here is you can't take a personal living expense and take a portion of it and call it a deductible business expense. This is one that the IRS, has seen a lot of scams involved on this. An unscrupulous tax preparer might try to convince you to claim personal use of your home or personal expenses for the home and claim them. Be careful about this. You want to keep things as separate as possible. That way it's very easy to explain. No, that's the internet for the business, and I have separate internet for my personal use. IRS.gov has more info on that. So let me kind of compare the two. First, you got the simplified option or the regular method. Simplified option, as a reminder, is you're going to only be claiming a very limited amount of no more than $1,500. And so simplified option, the deduction for the home office, as long as it's exclusively and regularly used, you can claim up to $5 a square foot, as long as it's not above 300 square feet. For the regular method, you're still going to have the same tests, exclusive and regular use. For the regular method, you're going to figure out a percentage, either by the number of rooms or by the area. And regular method then has more record keeping because you're going to have the actual expenses for all of the utilities for the home for the year, all the homeowner's insurance, all of the other expenses that you're going to use a percentage to deduct. And you're going to calculate the actual expenses. So there's more record keeping involved. Again, on the simplified option, home-related itemized expenses can be claimed on the Schedule A. However, for the regular method, you're going to need to kind of figure out what's personal and what's business. So this is one reason why for some people, especially with a small office, a simplified option might be beneficial because then their record keeping is not only easier, but then they can also deduct home expenses, any of the itemized deductions on a Schedule A that they might qualify for. For the simplified option, you don't get to add in depreciation of the home, so that may limit your dollar amounts. But again, it's meant to be a smaller amount and an easier way to capture or to show the right amount. But in the regular method, especially if you're using a large portion, depreciation is allowed for the home portion of the home that's used for business. Because the depreciation is allowed under the regular method, recapture of depreciation, if you have gain on the sale of your home, needs to be considered, and you're going to need to do some calculation. On the simplified method, this does not apply. So if you don't claim depreciation on the simplified method, you don't need to pay it back when you sell the home. The simplified method and the regular method, both, you're going to be limited in dollar amount to the gross income from the business. And so minus the business expenses, what we call the net income. And so there's a limitation there. But the simplified method, you're not going to be able to carry it over. So let me kind of put that in detail. Let's say for the first year you were in business, you had $1,000 worth of net income, and you had a 300 square foot office. So you want to deduct $1,500, but you can't carry it over to next year. So all you're going to be able to deduct is $1,000 under the simplified method. Under the regular method, anything in excess of that gross limitation can be carried over to the next year. So sometimes it's going to make sense to do the regular method to carry over. So simplified method, it doesn't carry over. Same idea with the losses. If you have losses can't be carried over to the next year. So same idea. Well, with the regular method, you can carry over a loss. So let's kind of review everything we've covered. We covered a lot in this hour today. First, the requirements. And the requirements, the terms I want you to know, regular use, exclusive use. Talked about how to deduct business percentage so that you have expenses like your utilities, and you can calculate a percentage that the business used. Also, the types of deductible expenses, like ones that apply directly to the business, like painting the office, or indirect expenses. Those are the mortgage, those are the utilities, etc. And then a little bit about how to determine your deduction limits and where to find them at irs.gov. And then where to deduct them on your return. So for sole proprietors, use Form 8829, carry it over to Schedule C, and deduct that from your income before you calculate the taxes. For S corporation owners, for partnership owners, make an agreement, and that way you're deducting these on the business's return before they pass on income to you through a K-1. Again, talk to your tax preparer about how to draw up an agreement like that and where to deduct them on your business returns. Talked a little bit about the effect on when you sell your home if you have a capital gain, and what kind of record keeping that you need to keep. And also, I mentioned a little bit about those tax avoidance schemes. If somebody's telling you something too good to be true, like you can deduct the costs for your home swimming pool, be careful about that. And a little bit about the differences between those standard and simplified methods. Now, if you have any questions, definitely, please get in touch with me, especially if something comes up after the fact when you find that there's some complication that you weren't aware of. Also, it doesn't even have to be on business use of the home. If you have a complaint or a comment about an IRS program or policy, we want to hear it. So I'm your ears. Give me a call or send me an email. So that's the end of my presentation, but I do want to open it up. If anyone has questions from today's presentation that they want to bring up, maybe to clarify something or have me go over something else, that you didn't quite understand, please ask now.